Hello, and welcome to another update video about Kaspa. I already covered Kaspa, I think it was last week, and we had 3 wave counts on the chart. I told you which one my preference is, which was the yellow one, which continues to play out at the moment. I've taken there was one bearish one that I've taken off the chart now. This was not my preferred one, it was only the alternative, and the good news is it has now been ruled out, and therefore we have a higher probability chart, even though I have to say that with any diagonal structure and the move of the September 22 lows, it is not an impulse. So it's a diagonal structure, it's a poor probabilities chart. However, it's currently still following here the idea of a diagonal structure to the upside. We have a few things here to talk about. Let me go to the daily chart, not the weekly. So here on this, I was just checking if we can actually, no, we can't. So it's okay. So I leave the trend line as it was here. So we've got a trend line here that we can pay attention to. Already explained, I think in the previous video, that as long as we are holding this trend line, I would remain focused on higher here in this yellow third wave. So far, that hasn't broken. Obviously, we're now in a price discovery phase because this third wave is now, price is at least now in an all-time high territory. So there isn't really the level where we can say, okay, we've got structural resistance here and there. All we can do is to use indicators to understand potential divergences, use helpful tools like trend lines, and also our Fibonacci extension tool, which would give us the next Fibonacci extension targets, which are 7 cents here. The next one, the 78.6 Fibonacci extension, and the 100% extension, which is 11.5 cents. My take is that somewhere between the 78.6 extension and the 100% extension, we should see some weakness and would have a good chance to start this fourth wave breakdown. Now again, that fourth wave would not be bearish. It would simply be a correction in an overall uptrend. Now we need to be careful that obviously this is an extremely young chart still. It is a less reliable chart. However, we are in an uptrend and we are focused on the uptrend as long as it is going. And it would take from here actually a break below 1.1 cent. Due to this impressive price action that we've seen, it would take a break below 1.1 cent to, let's say, to favor the blue wave count, which would also be bullish. But at the moment, due to the structure and the idea that this looks like a diagonal, it could drop theoretically all the way down to 1.1 cent from here without invalidating the yellow wave count. In the yellow wave count, we are still in this third wave because it's a diagonal structure. I'll zoom in a bit. The third wave consists of an ABC structure. Here, A wave, B wave, C wave. And again, that's why I'm focused here on the area around the 1-to-1 ratio, 11.4 cents. That's just a typical target for a C wave. Looking at indicators on the daily chart, we start to see a potential early bearish divergence. It's a little bit too early to confirm it, but it's an early bearish divergence that often happens in these rallies towards the end. Now, this doesn't mean it has to come down now. It can still extend higher, as I said, to the extension levels, but it's just the first warning, okay? And what you need to understand is that this yellow box, this would be the support area. So we have to pay attention to these Fibonacci supports when price comes back lower. As long as we are, again, holding that support area, we can expect one more high in the fifth wave. And then we have a 5-wave move up, and we can look forward to an ABC structure to the downside for the next trade setup. But the wave 4 will already present a pullback opportunity. Be aware again that we are now in an all-time high territory, so that always means high risk until we get a pullback where price can show that it can actually hold such support. So paying attention to the trend line, paying attention to the Fibonacci extensions and the divergences is key. In a more bearish scenario, this is just an A wave, we're coming down in a deep B wave. That would not necessarily be long-term bearish, but certainly a more uncertain chart. But we won't really know if the blue or the yellow count is playing out until we see if price can hold the 61.8 retracement. And bear in mind that this one has to be adjusted together with the price. So should the price go higher in this third wave, we also have to adjust the relevant support area. And yeah, I don't think there is much more we can say at this stage. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.